Good morning. This is Russ Squire from 1031 Property Exchange, and this is a mini course we've developed called 1031 Exchanges for Accountants and Tax Preparers. So let's get on with the show. These offices of 1031 Property Exchange were located at 1087 Stone Ridge Drive in Bozeman, right next to CNH Engineering. All of our contact information, phone, website, which is 1031property.exchange, and then my email are listed here on the presentation if you need to contact me and ask any questions. Here's a little bit of my biography and background. I was an '82 graduate of Montana State University with degrees in finance and economics. I worked for Bank One, several large corporations, worked as an investment advisor for quite a few years. Founded a company in 2004 called Big Sky Property Exchange, and we subsequently sold that to a publicly traded bank. We've done a lot of due diligence on development and development-related projects. I personally have done quite a few development projects, and have done a lot of community service in Bozeman. I was affiliated as the president with the Southwest Montana Home Builders back in the 90s, helped found the Parade of Homes, was the president of Eagle Mount for a period of time and on their board for 6 years. Worked on and served on the Bozeman Impact Fee Advisory Board, the Affordable Housing Task Force for the City Parks Advisory Board, and was the recipient of the 2000 Red Cross Community Service Award. So it's a little bit of my background. So what do clients want from their accountants? The big question. Well, I guess the picture at the bottom answers it. What they want is they want to see their tax return produce nuggets of gold, i.e. money they couldn't find otherwise. And really, they want advice that saves them on taxes, makes them more money, grows their wealth, and justifies the fees they're paying you as their tax preparer. So 1031 exchange is a wonderful way for accountants to be able to bring some of that value to bear with their clients. Create value, and you've got a customer for life. So what is a 1031 exchange? Well, quite simply, it's just a provision in the IR, Internal Revenue Code, that allows property owners held for investment purposes to roll over all the equity in their property into another property without paying capital gains tax, depreciation, recapture, and state capital gains tax. And I can't tell you how many people come to our offices and tell me, gee, who cares about capital gains? It's only 15%. Well, if it was only that simple. But the problem is when you got clients with older investment or commercial properties that have been rented, they're going to have depreciation recapture and potentially state capital gains tax, and that can add up to a significant amount of money. Think of it like an IRA or a suitcase where the gain's portable between properties, and interestingly, who exchanges properties? 65% of all the 1031 exchanges performed are for 1 to 4 unit rental properties. Now the other 35% are commercial and ranch. It's a huge opportunity out there, and commercial and ranch real estate, while their larger transactions generally represent over 50% of the value of all the 1031s, because of the transaction size, it's actually the smaller properties that are doing the majority of the 1031s. 1031 exchanges matter for CPAs because they add real monetary value to the advice you give your clients in the form of large tax savings. So you can use it as a tool to really, I think, further help cement client relationships. So what does a 1031 exchange look like? Well, on this diagram, we've got the exchanger at the top. The exchanger is going to be selling a property and passing a deed. We use direct deeding to the buyer. In turn, cash flows to 1031 Property Exchange. It actually goes directly from escrow to, or from closing to an escrow bank. And then that cash is held and redistributed based on instructions from the exchanger to a seller, who in turn directly deeds the property back to the exchanger. Now this all takes place within the guise of a 180-day total exchange period, and the first 45 days of that period are the identification period, where the exchanger must identify replacement property for the property they've sold. So that's a nice little straightforward diagram that kind of explains it in a visual manner that a lot of clients can understand. Money flow in a 1031 exchange and instructions. Well, we send instructions to a closing or title company after reviewing the HUD-1 closing statements. Once the closing has taken place, the money flows directly to the escrow bank. There can be money going out to the exchanger, but if it does go directly from closing, it then becomes taxable boot. The exchanger will then send us instructions. We'll send instructions to a closing or title company for a replacement property. We send instructions to the escrow bank to wire funds to the closing and review the HUD-1 statement prepared by the closing or title company, and then the money flows and the deeds are transferred and the exchange is complete. So that's sort of another diagram that shows the flow of money and instructions that occur during an exchange. 1034 exemption, something we see used a lot in conjunction with 1031 exchange, for a primary residence. And of course, the 1034 allows for up to $250,000 in gain to be taken out tax-free from a single taxpayer, and up to $500,000 in gain for a married couple filing a joint return. Now, the biggest mistake I see people make regarding 1034 is they get confused and they think that the value is $250,000 or $500,000 in gain. They confuse it with the gross selling price of the property. I always remind people, you can sell a $2 million home as a married couple as long as your cost basis is not below $1.5 million and all of the gain is exempt from taxation. So that's something to keep in mind when talking to clients, especially if they're looking at a property they're going to do a 1031 on that's a primary residence, but it's a large tract of land where they might be able to justify, say, out of 100 acres, 80 acres being investment property and 20 acres attached to a primary resident. We just call that bifurcation. Separate the property and you perform a 1031 on the property held for investment purposes. So that's another way to get around the little trick of having in excess of say $500,000 in gain for a married couple filing a joint return is by bifurcating the property and then treating the other acreage as investment property. And we've seen that done, and we perform many exchanges where that does get done. $1034 exemption further, it's a 2-year holding period. You can sell a home every 2 years. Real popular trick amongst home builders that I knew. And if the gain's greater than the 1034 exemption, you could consider converting part of that primary residence into a rental property and hold it for a 2-year period. That would enable you to do a 1031, or the bifurcation solution that we just discussed on a larger tract of land is another potential avenue in the event that the gain is in excess of the 1034 exclusion. Okay, so in part 2, what we'll do is we'll take a look at how superstar accountants grow their business with 1031 exchange. If you do need a free consultation, you want to call us, you can reach us at the phone number there. Our website has all the tax forms for almost every state you can perform a 1031 in, because there are some states that have very state-specific forms that have to be filed. You can get all those forms off our website, along with just about every tax form you can imagine can be instantly downloaded and printed. So hopefully that works out to be a good tool for you as tax preparers and certified public accountants. So this is Russ Squire with 1031 Property Exchange, and we'll see you in part 2.